Let's get to the numbers. The first quarter loss, you set aside 820 million euros for bad loans. Can I ask you, sir, what made up that 820 million euros? Was there any one item in there? And can you guide the market for 2020 in terms of how bad that number could get? Good morning, sir.
Yeah, good morning to you. First, let me just highlight one thing for the first quarter result. As any Eurozone bank, we account for all operating taxes in the first quarter. It's IFRIC 21, and in particular, we pay for the resolution fund. And we look at a figure which I think is more representative of our performance, which when we spread these taxes, and there is more than 400 million cost for this resolution fund, we get to a 100 million underlying profit. Now, as you've said, one of the figure is the increase of the cost of risk, 65 basis points, compared to a third last year and twice what we had in mind beginning of the year before the crisis. I would say what we see is precisely an underlying cost of risk, which is representative of what we had in mind, but then effectively the impact of the COVID crisis with a mix of overlay provisions and some direct impact, and effectively some one-offs which are related to two fraud-related files. So it's a bit of a mix, but the bulk of the increase is related to the COVID crisis. And in terms of perhaps a perspective for the full year, let me just highlight that with a lot of prudence and according to different scenarios, we give a range of the cost of risk that we expect for this year between 70 basis points in a base scenario of, for example, a 6.8 minus a drop of GDP in Eurozone, and 100 basis points for a close to 13%, minus 13% drop of GDP in the Eurozone. So we think that we should be within this range for the full year.
Frederic, thank you so much for those clarifications, and great to speak to you this morning. So the fact you've set aside the 820 million euros for bad loans in the first quarter, can you put any kind of number in terms of millions or billions for 2020 in terms of loan loss provisions at Societe Generale?
Again, as I've said, with, again, the prudence of all the uncertainty on the scenarios, but also the benefit of all the government schemes. I think that what is very specific in this crisis, and I would say France is probably the most agile in quickly implementing these guaranteed facilities, which will reduce the default, it makes the provision, the forecast very difficult. As I've said, we have in a base case 70 basis points. 10 basis points that represent 500 million euros of cost of risk. So it means roughly for the full year in the base case scenarios, 3.5 billion euros. We start with 65 basis points, so it's more or less this kind of level that in this base case scenario, as I've said, with a minus 6.8% overall GDP drop in the Eurozone. If we were at 100 basis points, you can make the calculation. It's, again, a more extreme and long-term scenario of low activity and potentially with a second wave of coronavirus contagion.
Frederic, we've just broken the French GDP numbers. We expect it to contract by nearly 6% in the first quarter. The market had penciled in 4%. Each of the bank CEOs that we've spoken to have spoken to Nera and I, and they've talked about a drawdown of credit by major institutions. Have you seen that? Can you give us any numbers? And have you seen peak drawdown? And are companies in the process of repaying you? Just contextualize that for us.
Yes. Let me say what we saw. First of all, yes, it's some existing facilities which were drawn, and of course it increases the risk-weighted asset. But I think it's overall not that significant. It happened at the beginning of the crisis. Now it's more or less stabilized. And a lot of companies have gone also to the market successfully, raising funds and with bond issues. We, at the same time, and it's very specific to France, we have already put in place, we've received for close to 80 billion euros of guaranteed facilities by the government. And in 2 weeks' time, roughly, this money will be in the accounts of the companies. It's already a lot has been credited. And so we see also that, but with no impact on our capital, because or very minimal, because 90% is guaranteed by the government. So a lot of money is put on the table by the government to help the companies to go through this crisis. And I would say we are the good news also, the other guidance that we give, and of course looking at different options on P&L, on precisely drawing of facilities, of downgrading of credit, is that we will keep a good buffer on our capital for the full year and between 200 basis points and 250 basis points. So I think really the action of the central bank, the action of the government should help to limit the damage of effectively relatively high figures in terms of drop of GDP.
Okay, interesting. Frederic, we did learn earlier this month that Soc Gen registered several charges related to goods and receivables of Singapore oil trader Hin Leong Trading. This was according to documents filed on the website of Singapore's Accounting and Corporate Regulatory Authority. Can you tell us a little bit more about that and any other impact on Soc Gen of the trouble and the chaos that we've seen in oil markets recently?
Well, first of all, we don't comment on any specific file. As I've said, the cost of risk includes the impact of two fraud-related charges. Secondly, on the oil price, yes, there is already an impact in the cost of risk, but I would say it's relatively mitigated. And I think it's important to look at the exposure that we have, and we communicate that 61% of our exposure in oil is investment grade, so it's the large companies. And even with smaller companies, some of them had edged their production for an horizon of 12 months. So the impact will depend more also on how long this crisis will last. And again, it's related to the economic scenario. Beyond, of course, the fact that maybe the U.S. government might do things, or the geopolitical situation might change also. So again, a fluid situation. Already some impact in the first quarter, but we have to see, and we are confident with our exposure in terms of oil sector.
Frederic, what happened with the equities trading business? It looks as if it has imploded, servicing hedge funds, slumping 99% to 9 million euros. If you can give us some color on that, but more importantly, we wrote a story the other day that you took a derivative loss of between 150 to 200 million euros. We understand it's related to dividend trading. Is that correct? Was it a collapse in value? Was there a problem with mark to market? So the details in that business, please. First of all, with this substantial loss that we've reported, can you give us context?
Yes, absolutely. And really, it's the activity which suffered in the first quarter. The other activities, the retail activities, the financial services, and the other activities in corporate and wholesale banking, whether it's financing or FIC business, did very well. The FIC increased by 50%. But yes, we suffered on the equity underlying structured products for different reasons. We went through extraordinary dislocations of the market in the second half of March. And hence, in the revenues, we have different things. We have, first of all, an increase of reserves by 175 million euros in the equity structured products. Second, yes, we confirm a loss of 200 million euros, which is related to this brutal reduction or sometimes going to zero of dividends. And the dividends and the forward curve of the dividends is used to value the product, the portfolio. And hence, we had to adjust the valuation of the portfolio because of this unexpected drop of dividends for 200 million. And the last element is that we had, of course, higher hedging costs for managing the portfolio in this dislocation environment. So it means effectively a very low revenue for the equity underlying structured products this quarter. And this is really the specific factor. For the other activities, I think we've had pretty good or resilient activities overall.